And that means that we are live here on our halftime report, Tackle Trading's daily stock market show, where we actually look at almost anything that we're interested in. News of the day, charts of the day, economic data, if it's coming through that we find interesting, as we talk about the stuff that is moving the markets on a daily basis here on our YouTube channel. In today's show, many things. Number one, home builder sentiment is on the rise in the month of April. I want to talk about that at some point. U.S.-China relations continue to kind of stay sticky over the weekend. Some rhetoric out of, the Trade Secretary Navarro, actually very troubling in my opinion. I'm going to get the guys' take here in a minute. The House is pushing a $3 trillion coronavirus relief bill, but two really major things that are the lead here. Number one, vaccine news in terms of some real progress out of some of these trials that we've been seeing. And then Powell testimony over the weekend really propelled the market. We've got Cody, Noah, and Mark. If you're here for our first time, subscribe, click the bell, come back and join us every day. Cody, how you doing, young man?
I'm doing fantastic this morning. I have my office back. I'm no longer in the dungeon, although I did really appreciate my in-laws being here for 2 weeks, giving us just a mental break with the little one.
In-laws helping with the baby is definitely a big deal. There's no question about it. Oh. Noah, you had a road trip this weekend, right?
Oh, yeah. I actually went to go visit the in-laws. That's what we did. Went and drove to Denver and back again from last week to the weekend. It was kind of fun. Get out of the house and feel the wind in your hair as you're driving down the highway. It was good. Dude, I got my freedom haircut. Felt great. So
there and back again by no doubt.
Your hair looks great. By the way, I love the window down, wind blowing through your hair, kind of hanging out on the highway. Every time I do it, my wife threatens to divorce me. She cannot stand the window down and the wind coming through a car. She likes her air conditioning. Thank you very much. Marky, and how are you doing, my friend? Long weekend here with the markets.
USO's up 9%, UNG's up 9%. My naked puts got just cleared with the big price movement up. It's a great start for my personal week.
Now, if you take a naked put off early and it doesn't expire worthless, does it count as a part of the the little bet we made?
No.
It has to expire, right? That was our bet. It has to
expire, our bet. I got 7 in a row on you. 7 in a row. I'm sure I'll sell another one today.
All right. I like it. Let's talk virus here, guys, and let's talk a little bit about the vaccine. I think I want to lead with that. We'll come back to the market here in just a minute. S&P 500 is rallying into resistance. We'll get a technical read, but a lot of this is on the hopes of trials out of a couple of companies. Number one, AstraZeneca says they're going to have about 30 million doses ready to the UK by the fall if they can get a virus. But the big one was out of Moderna here, Cody, and the vaccine produced positive antibodies in all of the 45 participants. Mark, you read the report from Moderna. What is in there? What did they actually say about the trial?
Like when the remdesivir treatment came out about a month ago, we were quick to basically give it zero credence. It was absolutely just smoke and mirrors. Maybe there was something, but it wasn't a game changer. This Moderna report is the first positive news and truly a successful phase 1 on human trial where they batted 100% and 8 out of the 45, I believe, even developed these defensive antibodies. Not a scientist, just an analyst of the stock market. But what I do know is that was by far the best news we've had on a treatment or a vaccine. It looks substantial, it looks scientific, and it looks like it had really encouraging positive results. And of course, heck, if you're going to go up 700 points on remdesivir nonsense news, hey, you're going to go up big on actual real news. It's very encouraging from a real life perspective and puts another reason to be maybe a little more bullish. That doesn't mean go all in. We'll go into all of that. But it was a very positive report.
I'm not a scientist either, but we all play one on Facebook the last 2 months here, Noah. There's no question about it. It feels like it's very interesting, weird new world when we all know more about how the trials phase through medical research that we ever have in our life. It's amazing. We should just look at charts, Noah, and try to find reward to risk.
So interested in medical trial research data ever. But I just want to toot our own horn a little bit here. We've had Moderna on our coronavirus watch list pretty much from day one we put that watch list out, and it has been a juggernaut, performed extremely well. I'm only sad that I capped the gains. So, through an adjustment, but look at that thing rip. Look at that pop on that news. That's pretty impressive.
We all play scientists on Facebook, but actually Cody is a scientist in this field. There's no question about it. As our person who knows more about this here in this team than anybody, Cody, what was your interpretation of this phase trial result and what we saw over the weekend?
That's a successful phase 1 trial. 45 participants, all 45 show antibodies with using 25 micrograms to actually do the injection. That's a very promising phase 1 trial, which is obviously why the stock's up right now. Because typically, if you can get 80% of participants, or just a high margin of participants showing a positive result, that's when you have enough data to move forward. We got 100% of the participants all getting the antibodies similar to those that have recovered from COVID-19. And they were originally researching a SARS vaccine, and they basically kind of tweaked it slightly to adapt it to the COVID-19, and it seems to be working. So I think that's also why they had a leg up, is that they were already doing research within the coronavirus spectrum of diseases, or viruses, excuse me, that allowed them to be able to jump and just kind of tweak it slightly, because that's all COVID-19 is it's just a slight tweak or mutation of the SARS virus. So this looks really good, really promising. I'm going to keep an eye on it, definitely.
Yeah. Obviously the optimism around medical advances and treatments and things, Mark, we've actually priced a lot of this in. I know that's a triggering phrase when we bring it up, but we've actually been talking about that. We had a podcast about it a month ago, and medical advances or medical news, we knew these headlines could propel the market. It's really interesting what's happening technically here today. It wasn't just Moderna, by the way. AstraZeneca, AZN here, Noah, a huge, company, global company on a nice little trend there as well. They think they can reproduce the virus at an extraordinary rate to get it to the UK by the fall. The vaccine, I should say. And then SRNE.
Wait, they're trying to reproduce the virus, Tim?
They've been doing that naturally. Yeah, there's no doubt about it. But SRNE, a very, very under the radar company that I hadn't really ever even heard of until this kind of thing, Sorrento Therapeutics, they actually came out and said they have antibody candidates that are blocking infections early on when people do get infected, Cody. So even a different form of treatment there. What's interesting,
so that one, whereas the antibodies are typically allowing your body to detect and fight off anything that's gotten into the body. This other type of treatment is the virus is in the body, and you give the cells the ability to stop the virus from ever attaching. Because if the virus cannot get into the cell, then it can't take over and create that, get that cell to start replicating viruses for it. If it can't attach, then it's going to end up dying off anyways. And the white blood cells, even struggling as they are to get rid of the virus, will be able to keep up if the virus isn't replicating. So that's also a promising trial. You do a mixture of that and vaccines. So anybody who gets it gets this blocking drug. That's also positive. So then we have a vaccine and a treatment simultaneously. That's good. Really good news.
Yeah, and I don't think you can understate moving forward in how you strategically approach this market. And once again, bulls, you're not out of the woods yet, but I don't think you can understate that even if the Moderna trial fails, there's so many backup ones people are working on that positive news on one of those is just around the corner. These type of bullish clear out catalyst, we made a joke, and Tim, you referred to it we were talking about this a few weeks ago, that get used, and I think I used this phrase, I was like, bears, get used to your trade getting blown up by positive vaccine news. I think on the podcast we
almost
said
word for word, yeah.
We said rate this 1 to 100, on the legitimacy of the bullish catalyst, and I said vaccine and trial news on treatments 100 out of 100. This is one of the reasons I hate bearish trades in this environment, because this isn't the last positive news you've heard on a vaccine. You're going to, what did I even said? I said, what, you're going to have 20, 30 of these type days in the next year, Tim? These type of days are going to come up. It's one of the reasons that I'm a tactical bull, one of the many reasons. And it's great. And it's not just great from stock market. It's not just great because I'm up in my trading account today. This is real positive, changing news potentially. Now, is it a game changer completely? No, but it's not shabby. And once again, you're going to have 20 or 30 of these in the next year where some positive development. happens, market goes up on it.
You know, and this kind of all feeds into the reopening theme. There's no question about it. As I look at the map of, you know, states that have reopened completely versus states that are partial reopening or reopening completely soon, guys, most of the country is open for business. I mean, you were talking about the West Coast, Washington, Oregon, California, who've not quite reopened all the way yet or don't have
Are there
plans
any
all
states
the
that are
way.
open 100%?
Within the next couple of weeks, I think based on what the map I'm looking at, I think a lot of states are looking at they're going to be completely open. Yeah. In fact, even in Missouri, they were talking about concerts, you know, this summer. And comedy clubs are selling tickets here in Utah and in Texas. I was listening to some comedians that I really enjoy on their podcast. They're like, I'm going to Austin, Texas, do a comedy show because they won't let me do it in New York, you know, and somebody's coming here to Wise Guys in Utah, Noah. So whether it's now in a week or 2 weeks, reopening is happening, right? And regardless of what you're seeing in the data, it feels like the entire conversation has shifted to where, yeah, we got to open back up, and it's going to happen. Mark, don't you think?
Oh yeah, I know. And it's like this weekend when I was talking, I was like, I try to keep politics and my opinions on what should happen outside the market separate. Doesn't matter if you think we should. Doesn't matter if you think we shouldn't. The key in doing your analysis is what is going to happen, and we're going to open up. I mean, it's just going to happen. And so, once again, what happens once we open up is that, because I've heard really convincing arguments that saying, hey, once we get all opened up, that gives one of the bulls there, hey, we're opening up storylines that they can't go up on anymore. So, you know, but we are opening up. We are opening up.
Well, it's just like all trading and all news, whether you agree with it or not. I mean, the Fed lowering their rates next to nothing. I was never a fan of that, but I traded it accordingly. Just because you don't like something doesn't mean you don't trade it. You need to trade things. So you can be completely against the economy opening up. But if it starts opening, we're going to see some movement one way or the other.
You have to trade what you see. There's no question about it. Back on the S&P here for a minute. Noah, break that down for me technically, if you can. Just support, resistance, what you're seeing in the moving averages, those type of things.
Well, I'll tell you what. Case for the bulls, Tim, is when the market retested that 2,800 zone. You know, it's what a difference a week makes. You know, coming into the tail end of next week, a lot of traders were talking about, oh, that might be a double top. Look at that M pattern. A breakdown below 2,800, you know, would be possibly a quick drop down to that 2,700 period, that 2,700 ballpark with the 50 period moving average. But by Friday, they were buying to close, and here we are, showing that you know, big, strong, bullish candle. Now that's come in on relatively weak volume thus far. It's still halfway through the session here, so it'll be important to watch and see which way that closes. But that's a big, strong, bullish candle right up into the recent resistance zones, and call it 2950 ballpark. And then, Tim, it's got that 200 period moving average right overhead that the market's going to be watching. That 200 period moving average and 3,000 benchmark are right next to each other. So I think we'll see some follow through and a retest on that off of this bullish energy, kind of depending on where we see it close today. If we stay with a strong close up near those highs, I won't be surprised at all if we're not testing that within a day or two. I'd probably closer to a day is my guess. We'll see if we're talking about that tomorrow.
Go down to a 5-minute chart if you can, because it wasn't just virus news that propelled this. Even last night, Mark, Jerome Powell was on 60 Minutes talking about what his thoughts on the economy were and where we're heading in the next year, 2 years, all that kind of stuff. It was just last Wednesday that Jerome Powell kind of derailed the market a little bit and sent it lower during one of his interviews. But the market liked what OJ Powell had to say there. You notice the futures market started picking up last night. Mark, what did Powell say on 60 Minutes that traders were so bullish about?
There were two phrases. One, that basically it was funny, is that the digital money, like Bernanke, this is funny for Fed historians. Bernanke would never admit that they didn't print actual dollars. And Powell last night says, yeah, we just digital print those. And then he said the key phrase was, and this is what, I mean, Powell is saying, hey, it might not be good till the end of 2021, all of this dire stuff. But what traders heard, the bulls, and this is why it's great to be a member of a team, the team, push out everything you hate and only hear what you want to hear, when he said that there's basically no limit to what the Fed will do. There's no limit to what we can do. And traders are like, the Fed's got our back. The Fed's got our back.
Mhm.
So even if we buy today, they'll come and help us later. And that's been the general push for the last 5-6 weeks, right? The Fed has our back. The Fed has our back. The Fed has our back. It's not fundamentals driving this. Bullish traders don't care about fundamentals. They
No,
care.
fundamentals don't matter.
They don't.
They don't
matter to them.
Not in the short term. They
And-
don't
and-
care about the valuation. They could care less how many jobless there are. They could care less what happens with inflation or consumer prices or consumer demand. None of it matters in the short term because, quite frankly, and I'm not arguing with this. I know it sounds like I'm ready to go after that, but no, a lot of people are basically saying, well, this was a lockdown. It was extraordinary. Why would you judge anything happening right now until the economy reopens? Is that the bullish perspective, Cody, Noah?
Well, it's got to be at a minimum the bullish rationalization for that, because again, I think that you look at some of the data coming out, and the data with the unemployment numbers and things, although a lot of people think they're temporary, that's still something to be concerned about, because if they don't have jobs, they don't have money to spend in the overall economy. Well, maybe I've talked to quite a few entrepreneurs who said they're having a hard time getting employees to come back to work because they don't have any incentive to.
Yeah.
Extended unemployment benefits and little government check here and there, there's not a lot of incentive for them to go out and take the risk. So
I mean that is
big
the
frustration.
For those getting $600 free week on the Fed, 18-year-olds that were making $200 at McDonald's and now making more money than you thought you would make in 10 years, that's coming to an end. Like, the more positive the stock market is, the more positive you have news on reopening, the more positive you have news on vaccine, the more stalwart the Republican Senate is going to be to not re-up that money. They've already said they don't want to. They're very adamant about it. So come the end of July, that gravy train is stopping. Now, that's not necessarily good for the economy, right? That's a lot of money they've injected for people to spend. It's not necessarily good for your average American, but once again, that's what's going to happen. Be interesting to see when that comes closer, if the market reacts negatively to it at all.
Well, yeah, it's not going to end until that money stops. Like, if they keep getting checks in the mail, they have no incentive to go to work, period. But it can't be forever. You can't continue just to give someone money and then expect them to invest it or spend it or help drive the economy. They're just going to sit back. And I mean, I saw pictures of electronic sections in Walmart just being emptied out. It's like, that's a smart way to use all this money that's meant to help you survive.
I have a friend who works at Costco, and they priced a big screen TV exactly what the $1,200 bailout check plus tax would cost. I mean, and they sold out of them very, very quickly. So, I mean, there's certainly, some short-term, benefits from that, and people obviously spending that money however they want. But that just might be anecdotal evidence. But at the same point in time, that chart.
Well, it's consumer perception, right?
Yeah,
I mean, think about it.
Yeah.
When they pull out of workers right now, almost all of them think they're going to be back at work within 6 months. They all feel like this is a temporary thing, right? So that's the thing. I mean, most people think they're going to get the job back or go back to the workforce at some point soon. The problem with economic history, quite frankly, is firms and companies don't have an incentive to bring back the highest cost workers. They've never done that in the history of joblessness. They don't do that right away. That's not
they're
how.
Also going to trim the fat. They're going to get rid of employees that they already wanted to get rid of, that they're just not going to bring them back on. There's going to be a problem with people who got the check or were using it for frivolous means and not saving it. Even when they go back to work, you don't get the paycheck on the first day you return to work. There's going to be a down period of, do you get paid bi-weekly? Do you get paid monthly? If you don't have that cash on hand to live through that month until that next check comes, there's going to be a hard time there as well. There's got to be some responsibility in the way that this money was spent, and I'm not seeing it.
Well, and here's a couple other things around that. A lot of people aren't seeing it, and that's why you're getting pushback from the Republican Senate right now, Mark. One of the bull arguments forever has been there's going to be continued fiscal stimulus, that they're going to keep passing bills and put more money into the economy and support people. That part of the thesis seems to be drying up quite a bit. Do you think this $3 trillion coronavirus bill is going to get modified, an agreement made, and something passed through the Senate at some point? Because they say it's dead on arrival right now. The House pushed it through.
Listen, once again, it doesn't matter what you think should or shouldn't happen. Republicans in the Senate have made very crystal clear their political stances. States, you're going to have a hard time getting money. That's not bullish for the stock market. It's not bullish for the economy. Individuals, you're not going to get as much assistance. Now, of course, it'll probably help big corporations, right? Because, that's just the way it goes. But that 3 trillion isn't even coming close to getting passed.
No.
It just, there is a real, and kudos on one level from a philosophical, old school conservative standpoint. We can't make our children pay for everything, and our grandchildren pay for even more. But the reality is that the money is running out as far as coming from the federal government. And Jerome Powell, interesting and lost in so many things that he said, is that he basically has said, hey, listen, guys, this economy is really screwed unless you, from a policy standpoint, there's only so much we can do. You guys need to pour a ton more money into it. A ton more money into it. But, listen, I am more tactically bullish than I have been at any point. What Tim and I were talking before the show. I'm going to trade like a 22-year-old. When I get a good trading setup on any stock, I'm going to hit that from the bullish perspective. I'm not going to overextend myself, but the technical analysis works. When I get those quality setups, I'm going to play them. But from an investing standpoint, all I'm doing is going to lift up the levels in which I was willing to buy. The bears still have all of the great arguments, from money managers not participating in this rally to hedge funds not participating in this rally, from Warren Buffett and David Tepper and all of the smart guys in the room and the smart women in the room saying, hey, sorry, this is overvalued, to situations that can flare up with China, to situations that can flare up with COVID-19, to consumer spending not happening. The bears still have all of the great arguments. Now, I'm still a member of Team Bull, still a member of the team, but I'm still going to be very, very cautious. I'm just going to be, the example I used to Tim is I had a naked put on Marathon Petroleum at 1750. Marathon Petroleum, which I've talked about the last couple of weeks on the Commodities report, up 13% today. Now, I wish I would have just bought 100 shares, right? Because you always wish in hindsight. But instead of like 1750, I'm going to start selling those naked puts at 2250. So lifting up the targets, because once again, these vaccine news is going to happen time and time again over the course of the next year. I feel more comfortable buying it a little bit higher, lower levels, but buying, especially at resistance right now. No, I mean, talk about the resistance. What happens if the market doesn't break out of this resistance zone in the next couple of days?
Well, there's a psychological threshold when it comes to resistance. Whenever you see a market test, like one of the questions that came into the chat, like how can the market move up this much on low volume? Well, that's simple. You just don't have people selling. You have motivated buyers and not a lot of sellers. And so to get people to sell, you have to keep raising the offer. Well, when it gets up to those thresholds, there's a lot of anticipation. It's like, okay, is it worth more than that $3,000 threshold? And there will be people willing to buy. The question is are there also people willing to sell at that price point? And if you have a lot of willing sellers, it won't break through. But if you don't have a lot of willing sellers and enough motivated buyers, it'll break through. And then that might flip the script a little bit as far as that 200 period moving average goes and that $3,000 price point on the S&P. But in the meantime, it's been chopping sideways, kind of ping-ponging back and forth between 2950 and 2800. And that sideways movement, again, like I was talking the beginning of the show, a week earlier or late last week when it was pulling down and testing 2800, I was worried about the support zone breaking. And because the support zone held, it kind of dissolves any sort of bearish sentiment I had that was thinking, okay, if we get a break, we'll see a sharp drop. Well, same thing here at the resistance point. If we get a break, we'll probably see a sharp rise. But I think that 200 period moving average is a threshold, and the NASDAQ's already above its 200 period.
And will you pull up a weekly chart to add credence? So you have a horizontal resistance, you have the 200-day moving average, and you are smack dab right at a 20 weekly, a falling 20 weekly,
Yep.
you got a real huge band of both algorithmic resistance and horizontal resistance. You can see, Tim, you want to know what my trading day has been today? I don't know if you can see that. I wrote this down at 6 in the morning.
Read it to us.
And it says, do not do bullish actions at resistance.
Let me see that one more time. I just want to see that.
There's my trading today. Do not do bullish actions at resistance, because I'm a bull, right? I want to get at the party. I want to make the most money I can. But you don't stay around this game for 15 years if you buy at resistance. Now, there are some patterns I can get behind, some high base, beautiful patterns, trying to front run it. I talked about that last week. Brought on broad market, a big run up right to resistance. I was like, listen, hold your jets, be patient, be patient. You know, that's a lot of resistance it has to get through. You know, a lot of resistance. I would much rather do bullish actions when it gets on the other side at a higher price, breaking through than right at resistance. It's a rule I have. That rule serves me well. It serves traders everywhere well. It's a good rule to incorporate.
By the way, we're working through the markets one step at a time here on our halftime show. And I want to get you guys' take on one thing, big picture, but I want to click through some charts here first before we do it. Noah, give me a quick peek at all the indexes and on the NASDAQ if you can, because it is the strongest.
Well, I mean, the NASDAQ
also
is
at short-term resistance.
But it is very minor by comparison. That
Yes,
is not a 200 period moving average kind of resistance. That's just a minor pivot resistance, which doesn't, yes, it holds weight, but not nearly as much weight.
No, I will trade that on a breakout. Yes. I will. I won't trade the S&P. I won't trade a lot of stuff. That chart, I'll trade on a breakout. You know, little trade. I'm not going to go crazy. I'm not going to place a billion bullish trades. But when I get a good quality pattern, nice short-term uptrend, clear resistance level, if it breaks out, a little bitty trade.
By the way, before we move past it, I do want to get you guys' take on one thing about fiscal stimulus and policy. Did you read Mark Cuban's suggestion over the weekend?
I did not.
Cody?
I did watch about 5 hours of Mark Cuban on Shark Tank.
Man, I got to tell you, I loved it. It was such common sense. It's the thing I've been ranting about for 15 years. All these big bailouts, big stimulus packages end up in Wall Street hands and big banks and all that kind of stuff. And by the way, even at this one might have ended up with the workers' incentive not to go back to work. So government kind of failing again here in front of our eyes in many ways. I thought what Mark Cuban proposed.
Anyone surprised?
Was no, not surprised at all.
Not surprised.
Was very interesting. He said, you know what, instead of bailing out corporations, instead of giving the PPP loan more money, which is a failed program, giving money to zombie businesses that won't survive the bailout through the whole thing, why don't you give American workers, there was about 128 million he identified as qualified, worker ranges and all that kind of stuff, $1,000 every 2 weeks. Now, before we go all anti-socialism and everything, here's a caveat he had with it, which is what I loved about the idea. During the next 2 months, to get us through this economic struggle, and only for 2 months, we'll give them $1,000 every 2 weeks, but they have to spend it or they don't get the next check, Cody. And they have to spend it on certain things like back into the economy, going out to restaurants, because his whole point is economically, guys, you can print all the money in the world. If consumer demand doesn't come back, you're not hitting your objectives. I thought
he did a demand size economics idea is that the supply is still up there, or even if the supply is not where it should be, you increase the demand. Okay, I can see it.
He called it trickle up economics. Mark, thoughts?
Okay.
I think Tim has found his new Bernie Sanders.
Oh, I love
it. Tim loves Cuban. Get the t-shirts ready.
I would vote for Cuban in a heartbeat. There's not even a debate in my mind. We need a third-party independent candidate, but that's a different discussion. We're not going to go to politics. Noah, what do you think about that?
To do that, we would need a parliamentary style government.
Well, it would certainly give us better velocity of money, I think, than just, again, with the traditional corporate bailout, which is where what you were talking about earlier, Tim, those jobs don't come back as quickly. There's not as much as incentive for them to rehire, depending on especially if the demand's not there. You know, if people aren't going out and spending. Now, you flip the script. I think the trickle up idea works because it creates velocity of money, and then the corporations will get the money eventually through the actual activity, and it's going to promote behavior it's incentivizing spending behavior, whereas the corporations don't have that same incentive, and that the velocity of money won't be anywhere near as powerful when you give it, straight PPT loans to, I like the word you use, zombie corporations.
Dude, how many of these loans are going, not even just at the PPP, but the Fed loans are going to be funding companies, Mark, that fundamentally will be out of business anyway? So many. There's got to be so many, but
many.
Jerome Powell doesn't care. He keep printing. Let's keep breaking down all the broad indexes. Crude oil breaking 30 for the first time. And Mark, we're talking about some of the best stability we've seen for a long time. I've been waiting for an event for a month, which is today and tomorrow. Now, the futures expire tomorrow. Do you think we're going to see any kind of disruption, or is it going to be a fizzle?
I mean, it's probably going to be a fizzle. The bulls have too much going. I mean, the bulls have had the supply argument for about 2 weeks now on their side, with cutting rigs, less pressure on storage, and now they got a little demand kicker to boot. I mean, that's a lot. That's a lot of that's a lot going for them right now. So how far can they push it? I don't know. All I know is, I mean, oil's up big today, right? Oil's up big. I don't care if you play the producers or the refiners or the midstream or USO. It's all up, and it's all gravy today. Very bullish on oil long term. This starting to feel a little extended, maybe, right? A little extended. Plus, the one thing I'm concerned about oil, and I talked about this weekend, is last go around when we switched contracts, a bunch of traders tried to front run shorting oil because USO and all of these other ETFs and ETNs, they knew that they were going to go in a process of rolling out, and they really put a lot of pressure on oil for 2-3 days as on that front month contract. If they can't succeed in that this week, sign me up, because they're not going to succeed for a while. It's going to take another shock. So I'm being a little patient with new positions, until I see what those traders do, because they were really successful in spooking the market on those first days of the contracts. I don't know if that's going to exist this time ago, but I can wait a few days before doing anything new.
Yeah, the charts in the oil sector and energy sector, guys, and I'm talking about drillers, producers, refiners, they're all looking interesting. Mark, out of all the different oil companies, I think you told me you're most interested in refiners. As I'm looking at the charts, they all look pretty good, but why refiners?
Well, because, there's a lot of ways this can play out, right? Now, if we open up and we do well on the on COVID-19 and things, everything's a good play. Everything's a good play. But in scenarios where things are stagnant for a while, I like the refiners more than the producers, because to make money as a producer, you actually have to be producing. And they have cut oil rigs tremendously. So their profitability is still going to be really, really hurt throughout the year. So in a scenario where everything goes well in society and we're all back to work and everything's going well, I like it all. But in the different ways oil can play out, I like things like MPC. And if you go around, and I've been talking about this for about 3 weeks, I mean, we see some huge gains. So MPC, Valero, VLO, PSX, we're seeing strong movement across the board in all of the refiners today. Nice little breakout channel potentially. So I like the refiners. That's where I've been for a few weeks in a lot of the scenarios. Now, once again, I'm being a terribly cautious coward, and I'm selling naked puts at lower levels. But
that was Rockefeller's strategy.
I'm raising
Rockefeller as a producer. Rockefeller went for the refineries, and it worked out for him. Yeah,
I'm raising the price in which I'll take ownership of that first 100 shares after today's vaccine news. But I'm still being cautious. That's just who I am as a person.
Mark, Cody was just trying to give you a compliment, calling you a Rockefeller.
Yeah,
and you just stepped right past him.
Right over it.
That's what Rockefeller did, Mark. That's a brilliant idea. And you're like, I don't care. Just
Rockefeller.
I want to make money today.
I mean, Rockefeller was worth $220 billion in his day.
Cody, have you not learned halftime show rules? Only I am allowed to make arrogant comments about myself.
All right,
Only
take
I
it
can
back.
do that.
You're right. You're no Rockefeller.
Oh, thank you. See, that makes me feel, I feel more comfortable.
It's
with that.
much easier, right? Let's keep talking markets here. Natural gas finding major support. We talked about that in our scouting report meeting on Friday. Mark, I know that you've been interested in that gas. Beautiful green candle up 11% here.
No, I mean, I like I've been talking about natural gas for a month in commodities. I really like the shifting fundamentals. I like it as a long-term play. I'd like to thank David Dean, one of our pro members out there on our Friday show. He was like, hey, I got a naked put at 1150 expiring in 2 weeks. And I was like, let me join with you. And I sold a naked put on UNG at 1150 on Friday. Thanks for the $70, David. I do appreciate that. So, you know, like natural gas, see, this is the kind of market I can get behind. Where I have improving fundamentals and I'm getting it at rock bottom prices. Yeah, this is where I like things. I don't get it very often, but I do like it in natural gas, willing to start a position.
Mm-hmm. It's not a beautiful chart, but you're more focused on the fundamentals and building a cash flow position, which is where support was very significant. I think everybody, we even said, okay, we're going to downgrade nat gas, and everybody's like, no, there's no reason
go
to.
back to the natural gas chart. If that support don't break, it can't go down anymore. And if it can't go down anymore, it only has one direction it can go.
Support and resistance. I love it. I love it. Gold and silver quick here, Noah. Gold hitting resistance. Silver's got a nasty candle. Give me a read on the chart if you can.
Gold hitting resistance again, just popped up. It had a pretty good recovery last week. It looked like it was going to continue to rise. Gets out into that 1760 ballpark, and you're seeing some selling pressure. We're going to watch for a retest back here in the 1730 zone. Let me zoom in on that so we can see that a little bit better. So yeah, popped up, touched that resistance zone. You know, got plenty of selling pressure coming in. I even noticed a small uptick in that selling volume, Tim. So whether that's just profit taking, hard to say. Watch for this retest in this 20 period moving average, call it 1720 zip code. See if it holds that line, and if we're going to see it form into, you know, a higher low would be a good sign for the bulls and probably increase the odds of a breakout next go round.
Mm-hmm. By the way, Robert Kiyosaki made news over the weekend calling for $3,000 gold. I think he said $30 silver and $75,000 Bitcoin, Mark. So
Team Bitcoin.
He's on Team Bitcoin as well. I'm not so sure about that.
70,000. How can I lose? I got to go mortgage my house and buy some of this. I mean, maybe not, but
yeah. I love the phrase. I think the phrase of the day, I loved it so much I wrote it down. I'm going to trade like a 22-year-old, but I'm going to, what'd you say, invest like an old man, Mark, or something like that?
I mean, that's how I'm going to approach this market. I'm going to trade like I'm a 22-year-old with no fear.
Mm-hmm.
Well, with some fear, because I'm not going to do a billion trades and go put all my account on a single trade. I mean, exercising proper money management. But on my investing portfolio, you know, I'm still going to be very cautious. Mm-hmm. There's a lot of things. This is a long war that we're battling in to see who wins on bears and bulls.
Yeah.
You know, bulls have been winning lately. They're certainly winning today. But this is a long when it comes to those investing dollars. Because if you are not willing to hold, and I'm talking investing, not trading, we can get out in and out of a trade in an hour. You know, we can be in trades really short time. But if I'm not willing to own that asset from now to the end of time, I'm not buying at that price level. Mm-hmm. And that is the type of conservative nature that will treat you well. Yes, I know Warren Buffett's an old freaking fool today, right? Every 21-year-old Robin Hood trader thinks they know more than Warren Buffett. And once again, trade like a 21-year-old Robin trader. They're killing it lately. Be that person. But on your investing portfolio, there's a lot of smart people that have been very successful in their life that are saying this market's not for them from an investing perspective right now. And I think those are words of caution that we should adhere to.
Quick peek at the dollar. Nothing to see there, quite frankly. It's been stuck around $100 on the index. UUP.
Extremely boring.
It's just boring.
The only thing I did talk about on the Forex report this weekend, though, is these neutral wedges. If we do get a break one way or the other, then it could move pretty quickly. But until then, I mean, I placed one Forex trade in the past 2 weeks. Mm-hmm. One. And it went nowhere.
Yeah.
This is a go fishing time where, I mean, when there's not movement, not volatility in any market, whether it's Forex, commodities, the stock market, then you don't play it. Go play one of the other ones. Have enough tools in your tool bag that you don't have to force trades, because when you force trades is typically when you lose trades.
Listen, any way anybody can approach the markets, find an edge and make money, I'm going to high five them, support them. Forex lately has just been so disinteresting to me personally.
I'm a Forex guy, and I've been disinterested.
Yeah, it's got to break out. Something's got to happen. I think the whole world can't figure out what it means when every central bank in the world starts printing more money than we've ever comprehended all at the same time.
I
And
think
so
we
the
also
value,
see the effects of it.
yeah.
How much are they going to add? When are they going to stop adding? And then after all the dust is settled, then people will look back and say, okay, how much did this country add? Okay, how much did this country add? Okay, how does that affect the evaluation of the currency? Like, it's going to take a while, but there's no point of trying to figure that out now if they just add more. You'll do all these calculations and run your numbers, and they're going to add more, and it's going to throw everything off. You got to do it again. So I think everybody's just like waiting, like, okay, let's figure out what happens after the fact.
Yep. I'm with you. I'm with you. Several things right now. We're going to make a transition in our show to Stock Talk. We have 3 different segments that we've planned for the show and trying to design it and get it. I mean, we just love doing it all the time, guys. I mean, Noah, we're so proud of what we're doing here. I know it's our little corner in the world, and it's not exactly, what you would get on like a CNBC or something, but isn't that what makes it beautiful? Isn't that what makes us who we are, right? Just being real traders and all that kind of stuff.
Absolutely. Plus I think we give it a little bit more realistic take than a lot of the commentary I see on the big mainstream outlets. It's a little bit more intimate. I think it's just interesting to kind of get into actually talk perspective, get into the mindset of the trader versus the investor. I love what Mark was saying just a minute ago. That's great content. That's good stuff, because that's what I think what the average person's thinking. Like, okay, well, how do I approach my investments? How do I approach my trades? And, I've got a handful of stocks that I've been keeping an eye on from our watch list that I'm pretty excited about. If we're going to transition into those, I've been pretty excited about ATVI and Electronic Arts with those high bases out of the tech sector, some of those game companies that have been on my watch list this week early on. So I'm pretty interested in those right there. That's a good looking chart on ATVI,
Gotcha.
high base. And then EA, I like that one for the high base there as well.
Yeah, we're going to do it through a lot of different companies. I love the gaming stocks, potentially high basing. We've been talking about them for a while. Out of all of them, by the way, I think the cleanest chart might be Take Two. Just a sneak peek at when we do look at stocks at the end of the show. Some of these I really, really like because earnings disqualifies that one, but they're all looking really strong. One thing I do want to do during every transition is
does it disqualify for a naked put before earnings?
It doesn't. You want to buy a gaming stock? It's in your playbook. It's on the team. There's no doubt about it.
Sell one down there at 110.
Yeah, I got a wide bid-ask spread, though. It's like 20, 40 cents. I was looking at that exact one. Let me see if
I'll sell one with you, Mark. Let's do this.
While Mark tries to figure out if he wants to try to extend his winning streak and push his luck there, got to get to 12, Mark. How many have you hit? 7?
Well, I've hit 7. And I got several successful ones running. Yeah, but they don't expire for a few weeks
until somewhere in June. Yeah, we'll come back to that. I do want to say real quick, though, we got 150 people here live in the chat. I always love doing this. Just tell me where you're watching the show from. We love our community. It's a big community. It's kind of a nice little reminder. Okay, I got friends in all kinds of different places across this world. Type it in the chat. Let me know where you're at out there in the world. If you enjoy our content, give me a thumbs up if you can. I appreciate it. Share the word. Get that word out there. And if you're not a 15-day Pro trial member yet and you've not joined our Pro community, there's a link in the comments below. Texas, Connecticut, Colorado, Sacramento, Florida. I like that. Wisconsin, Reno, all over this great land here, guys. And
I can't sell a naked put because it's at resistance, and I don't sell naked puts when things are up high.
He talked himself out of it.
Plus, he wrote himself a note this morning not to make trades.
I know, right? This is why you have rules, right? This is why you have rules.
Yeah. Let's talk about a couple of the major names here. Apple Computer, first off. There's several notes on Apple that I saw that I thought were very, very interesting. Number one, everybody keeps attacking old Uncle Warren Buffett recently about how Warren's lost it here and there and whatnot. The one stock he didn't sell? He didn't sell a single penny of Apple Computer, many others. But in his portfolio, Mark, I wrote the numbers down. It's his biggest position. He has $77 billion in Apple. The next biggest is Bank of America. Why does Warren love Apple Computer so much? You know,
Well, Warren Buffett, once again, this is value investing 101. When you have a moat, now this is a phrase you may or may not have heard, but it's an investing phrase talking about a defensive, it's basically talking about a defensible position that's really hard to attack. So think of a moat around a castle, and like when you invade a castle and there's a big moat, that makes it a lot harder. Well, when a company has a moat, when it's really hard to encroach upon that moat, when it's really hard to steal that market share, that's something that Warren Buffett really, really, really likes. I mean, that is a value investing 101 principle. If a company has a moat, if it's harder to get at it, then it becomes more attractive to a value investor. I mean, Uber, does Uber have a moat?
No.
I mean, well, Lyft's there's competing, you know, like competing for market share constantly. But within the services segment, so within the company itself, and then you have all of these services that Apple provides. It's why people that are bullish on Apple, other than, oh, Apple's cool, let me buy Apple. Well, that's not really an argument, right? You're just chasing price, you're chasing a brand name. But the people that actually are, that do numbers, they point to service and the services segment and the growth of the services segment and the ecosystem that Apple creates within its customer base. That's why Warren Buffett loves Apple.
Mm-hmm.
You know, it's not because Apple's cool. It's that they have an internal ecosystem that keeps growing, where anybody that has an iPhone, right? How much money do you spend with Apple? Not necessarily on the iPhone, but on all of the other things within the ecosystem. And so that type of moat that Apple creates internally, Warren Buffett likes that kind of stuff.
Well, I mean, and Apple is not just a technology company anymore. They've got their Apple Pay. They've got, you know, they're doing financing deals where they believe they're backed by Goldman Sachs and Bank of America. And it really, they're also providing content with Apple TV. So, I mean, the way that they've diversified their business offering, I think that really lends itself to the moat argument that you're talking about.
Mm-hmm.
So that's why Warren Buffett likes Apple.
Do you agree? Well, first of all, is Apple a consumer product company or a tech company?
It's a consumer goods company.
Both.
I was going to say yes.
Yes. Very good. Very good. Apple, by the way, also talking about reopening many of their stores. They're coming up with plans on how to get the doors open and people back into them, things like that. No details on that yet. Disney is opening up restaurants down in Florida. And obviously this reopening phase, Disney's a very interesting one. It also was announced that Disney was bought some of the shares by the Saudi Sovereign Wealth Fund. So the Saudis are on the team, Mark. There's no doubt about it. They're buying up Disney, Bank of America, Citigroup, Facebook. There were some announcements in their disclosures over the weekend. Disney's an interesting gap out here. I mean, 6.5%, guys. We're talking about that range, and there's just boom. I mean, now how do you approach this? I mean, Mark, what's your read on that chart?
It's in that proverbial no man's land. Like, it's a tough technical read, right? Like, wait for some smoothness. And you got to wait until, I mean, once again, this is one euphoric day, right? Where the market's still at resistance. I was actually looking at those Disney 80 puts that expire in June. So, you know, like, I'm more willing to buy at market lows on these type of companies than I've ever been. And that 80 put, you get like $20. Cody, what should I do? Should I sell that $80 naked put, or should I wait because the market's at resistance? And I do not do bullish actions when the market's at resistance. But I like Disney. If we have a pullback, I'll probably sell a naked put at that $80 level.
Well, that's what I was thinking, Mark, is the pullback into support. Like if it can come back down and retest and show me a little bullish signal after it fills the gap, I think one, you'll get more money out of the puts, and then two, the market probably is not trading at resistance, so you can follow your rule better, right?
Yep. Mm-hmm. So there's gonna be, listen, patience and rules, they're so annoying, aren't they? Like they're just so annoying.
Keeping you safe.
That's your 22-year-old trader self-talking to you. Mark's got like the two devils on his shoulders, you know. He's got the young 22-year-old Robin Hood trader telling him buy, enter, trade. And then he's got the old man, the sage advice saying, hey, listen, chill it out, dude. You've got your note there. Don't buy at resistance, right? Wait for confirmation, wait for your rules. I like the balance there, Mark, but follow your rules. Rules are supposed to be boring. That's my advice to anybody out there. Delta Airlines is announcing that they're going to start up a bunch more flights here. I did read that they're going to start building up this flight schedule and whatnot, still bleeding all kinds of money. With this reopening theme here, Mark, I mean, the airlines still are very unattractive to me, in my personal opinion. I am not going to get swept into this. Let's just buy the absolute bottom and try to bottom fish here. Mark, what's your read on airlines? Because they're coming up off the lows there for 3 days.
Treat them like any distressed company right now. Airlines have a real long road ahead of them. Even if you start opening up massively, I mean, their whole business system was designed to have a lot of people flying in those planes. And so we're starting to see upticks. I mean, I sold a naked put on AAL last week at $3.
Mm-hmm.
But once again, I'm not going to chase 13% price movement to the upside. I mean, if I can, once again, get these things at discounted rates, sell naked puts, acquire them, I'm willing to take a shot here and there. But once again, this is a long battle. It is so easy to get caught up in euphoria. We're breaking out slightly of the cues right now out of that resistance level, starting to poke our head a little bit above it. So
yeah,
really, you don't want to get caught up in euphoria.
Next one, Berkshire Hathaway. I know we already mentioned him, but I got to ask you guys a question. I wish Matt was here for this one because he would rant epically. Maybe I'll get him on the podcast or something. Every day, I'm starting to see more headlines that Warren Buffett has lost his touch. It's becoming prevalent thought in the thought machine we call society here.
Written by people who don't have anywhere near as much money as Warren Buffett. That's all I got to say about those headlines. So.
As much money, as much experience or anything. But where the hell is this coming from? I mean, the man doesn't want to invest in the middle of all these airline stocks at the bottom because he doesn't believe in the economic outlook. And people are going after him, Mark, that Warren Buffett has lost his touch. First of all,
well, that's what we do as members of the team, right?
Right.
It's not good enough that we're winning. We have to smash everybody that would stay in our way. And we have to denigrate them. And we have to say really terrible things about them. I mean, the team is ruthless. That's why I like being a member of it, because they don't care. They are ruthless.
I think it's the stupidest thing I've ever seen in my life. And quite frankly, it's the one thing that keeps reminding me, maybe this bull euphoria is so off the charts right now. You need to be very, very cautious in that regard, because when I get young people starting to tell one of the richest and best investors in the history of the world that he's lost it because he didn't chase a FOMO rally, I think they're missing some context here, Mark. There's a lesson, don't you think?
Oh, yeah, no, like, listen, those same kids would say, hey, listen, I just bought 14 out of the money calls on this, and I made more money than you did last week on this one trade. And I'm like, great, congratulations.
Yeah.
I'm very, very happy for you.
Yeah.
I mean, that's all you can say, right? You have to find your niche in the world of trading and investing, how you do it, what you're comfortable with. You got to find your niche. And I am a Warren Buffett disciple. I know over a 25, 30-year-old time frame, which I approximately believe I have left on this earth, that is going to treat me really well over time. Mm-hmm. You know, once again, I'll trade like a 22-year-old. That's what we teach at Tackle Trading. Teach setups, identify, trade, risk management, all of that good stuff. You can have the best of both worlds. You can be the flippant member of the team and trade to the upside, and you can be the cautious investor. You can have both. Yeah. That approach works for me. I think it works for a lot of people, but don't denigrate a man who has forgotten more than you will know, in the last year than you'll learn in a lifetime.
Hubris, Noah.
Hubris.
Arrogance.
Yep. Certainly is, isn't it?
Yeah.
So we'll see.
I mean, it all, listen, does anyone believe that modern monetary theory and the Fed is going to infinitely support this market from now to the end of time? At some point, they're going to pull back.
It'll work until it doesn't.
But at some point, the Fed, hey, if things are, I mean, this is the funny, and I mean, this is not because market participants are like, well, the Fed will have our back forever. And while that's true on some level, there's a point where they're going to scale back their efforts the better the economy is doing. Mm-hmm. They're not going to go full step on the pedal relentlessly all the time.
Mhm. Next one here I want to talk about is Taiwan Semiconductor. They actually halted their new orders with Huawei in China, Mark. And I find that TSM, if you can here, Noah, we Tyson Foods, nope, M is in
Oh.
Mary on the end there. Sorry.
TSM. Sorry, that was bad. Just typo.
Mark, the Chinese rhetoric and the U.S.-China trade negotiations, Peter Navarro had some very, very disturbing things to say over the weekend, quite frankly. But he's very hawkish from what I understand you keep telling me about. This Taiwan semi news, this is actionable news. When you take away orders to Huawei, by the way, Huawei is the number 2 buyer of semiconductors from Taiwan Semiconductor outside of Apple in the world. So when they say we're not going to ship orders to Huawei and we're moving a plant to Arizona and we're starting to see some of these news stories actually develop, what does this mean for U.S.-China relations right now? Do you think this is a big deal? I thought it was a big story when I read it.
I want nothing to do with semiconductor stocks. Nothing.
Mm-hmm. What's the reason for this? Is this Taiwan saying to the U.S., we want to go into business with you. We're going to support your policy. We're going to build that factory and we are going to hurt Chinese production. What is the reason for this right now? Because the semiconductor sector better than I do. Is it to hurt the ability for Huawei to roll out 5G? Is it just a shot across the bow? We're seeing this in semiconductors specifically the last few days.
Now, what the arrangement between Taiwan specifically and the U.S. is, I'm not 100% sure. I do know on Friday that the United States issued basically a proclamation that we're going to cut off all semiconductor products to Huawei with a grace period of 120 days. So it was kind of this preemptive. Now, once again, that's not actionable. It's like we did something, but we're going to have this 120-day grace period. Now, and remember that in the trade war, we had all kinds of deadlines, right? That this has to be done in the next 60 days or the next 7 weeks or whatever it was. And those deadlines would always get extended. So it's hard to give it any strength because we know what they did in the past just to extend deadlines. But if it were to come to fruition, China's going to do something in response. They just are. It's one of the reasons I'm so cautious right now and not overextending myself from a bullish position. Still bullish, still selling naked puts, still dabbling on bullish trades. But like that China response, they're not going to sit back and allow the U.S. to, with impunity, do whatever they want. They're going to have some token response. Trump responds, dominoes falls. We'll see how ugly it gets from there. But you can't cut off the resources to a country and not expect the country to just say, all right, that's good. That's cool. Yeah, we agree with you. No, that's not how geopolitics, that's not how nationalism works. That's not how any of it works. So how ugly can it get? Well, the market doesn't even care about the China story at all. But I think you have to be cognizant of it. I think you have to be aware of it. It's one of those things that you won't think of. And then that day, boom, something happens.
I think there's a lot of assumptions being done by market participants with this U.S.-China story based on past ways that they've behaved. And I'm talking about Xi and Trump and the trade negotiators and everywhere in between, that I think those assumptions are foolhardy and they are not pricing in the risk of this. Period. I mean, that's my perspective on it. Now, I don't want to see things flare up with China. Don't get me wrong. We've been talking about it for a week now, and hopefully it can fizzle away and people can just get focused. But I just don't, that's not my instinct. It is not my instinct that is going to happen. I keep seeing headlines, kind of little poke the bear headlines every day, Mark. Eventually that bear wakes up and wants to slap some people around. Let's keep working through the markets. Win casinos if we can. I thought this was an interesting story. They're reopening. But here are the 2 games you can't play. Cody, I don't know if you're a gambler, casino guy.
Oh, I haven't heard this. This is going to be interesting to me.
No live poker, no craps. Why go to a casino?
Oh my God. Well, I mean, seriously.
Yeah, what are you going to do?
They said the craps tables are too difficult. Only very high-end rollers in their own private room can play them. And they're not going to play live poker tournaments or games.
Is there blackjack?
Isn't the risk really in slot machines?
Yeah,
I mean,
I did
those
see
are
something where they had-
frequently touched surfaces.
The risk
I
is at
did-
the buffet. So
No, I did see something where I can't remember what casino it was, but they had it to where after a certain amount of time, the machine would actually turn off and say this machine is out of service until it's cleaned, and then the staff had to go clean it and put a code in to bring it back on service. So I did see that with the slot machines. I'm just wondering if blackjack's open and roulette. Those are my games.
dude, if you're going into a casino, you are going to be touching surfaces that were not cleaned. So whether it's craps, dice, or poker cards, it feels silly to me. You know, I mean, Mark, what's your favorite casino game? I know you're a poker player, but you're a dice guy, right?
I'm a dice guy.
Yeah. I don't know. This is where I think a lot of people are like, well, that doesn't make any sense. You're going to let me go and touch the slot machines, but not the dice on the craps table. Some of the logic, Noah, is not necessarily there in some of these plans I'm seeing personally.
Rather than having someone blow on the dice, they'll just spray it with Lysol real quick. Just throw it.
I like that.
Rather than blowing on it, just throw it.
Thrown out of the casino for blowing on the dice.
Yeah. Any interest in casinos in general, Mark? I mean, it fits the reopening theme, but they still have a lot of fundamental concerns if people don't go back to them.
Listen, I have interest in almost anything if it's cheap, right? Like, you wait for opportunities. It's like if you follow me, you know that when things go down in price, that's when I start to get more excited about acquiring. So I'll have any interest in anything if it's cheap, because I do believe we're going to beat the virus. I do believe we're going to return to a semblance of normalcy. I do believe that, life goes on, right?
Mhm.
So anything that's cheap, I'm willing to take a gamble on, but I'm not going to chase price either. I mean, MGM today is up 10%. Still got a lot of issues. So no, I mean, like not right now, but if, get a nice sell off, right?
Yeah.
That's just how I'm going to approach it. And that's how I've approached it for 7 weeks. That's how I'm going to approach it for the next 7 months.
Mhm.
Is that if I get opportunities, if I get sell-offs, if I think it's a quality company, or if I think it's a good bet, then I will take a stab. But I'm not going to just be like, well, I'm going to go buy a bunch of shares because I think everything's going to rally. Now, you need to be a little more sophisticated than that. Trade like that, right? Get a good setup, trade like that.
Next one for me is home builders. There was some data that came out of the National Association of Home Builders this morning where they were projecting a pretty dismal housing starts number, and actual, I think optimism came in at about 37 from the people who were polled in the survey on the market index and how strong they thought it was going to be. Now, 37 is very, very abysmal. I mean, those are bear market territory, things like that for real estate. Anything over 50 is assumed to be positive. Anything under 50 is assumed to be negative. But here's the good news, I guess. It's up from the previous number at 30, and home building, people who do this kind of work in construction are getting more optimistic. Do you think that residential construction is going to have a strong comeback here, guys? I mean, out of all the industries, I mean, the construction guys, they got to work. They got to go out and build stuff. There's no question about it. We're in spring season. This is when home buying usually happens. A lot of movements happen. Noah, what's your read on home building just in your own, here in Utah? I know we all three of us live, but what's your read on this situation?
Well, I mean, I think, in my opinion, it comes down to our bank's going to be lending, because if banks are lending, then home builders will continue to build. It's if the lending dries up, if the ability for people to qualify for those types of home loans dries up, then the builders will slow down. And that really, if you want a good example of what can happen to real estate, you just have to go back to 2008 and look at how many home builders, had to pull back on operations because loans became hard to come by. So that's my big question is are the banks going to keep lending? What are the qualification requirements?
I talked to one of my buddies, a good family friend. I've known him forever. Mark, he was your realtor. You know who I'm talking about. And I asked him, I said, how is it out there? Is it harder to get a loan? He says, well, for a while there, a lot of unqualified people probably shouldn't have got loans, so it's probably back to more where it should be for some time. I think they're going to tighten some of the lending on the higher end homes. No, I know that. In fact, who was it? Wells Fargo that said basically if you've got a balloon, home loan, a big mortgage, one of the higher priced homes in some of these communities, you've got to have like 300,000, 250,000 cash reserves at the bank to even have the loan. We're not letting you do it. Refinancing applications seem to be up though. Mark, any read on the home building sector?
I know Toll has a nice breakout level setup. But it's hard to get bullish at elevated levels, right? Once again, if it goes cheaper, I'll take a gamble. But that credit situation, banks have been very transparent. It's going to be harder to get a loan. Reiterate everything you guys said. It's just going to be hard to get a loan. That's not a robust environment. That's not a robust environment, but that is a clear resistance level on the chart, isn't it? So you want to take a stab with the trade. Maybe something sets up in a few days. It's a nice clear resistance level.
Sure. Yeah, absolutely. And guys, probably maybe just a couple more for me. Home Depot. Just be aware this week, the theme, one of the things we're going to be talking about are retail earnings. Earnings tomorrow, I think, before the bell, if I read that right. And then Walmart earnings as well. Then through the week, we've got Lowe's and Target and Kohl's and Best Buy. Guys, we're going to have a big, big week of earnings numbers coming through the market. And it's going to tell us a lot about those brick and mortar, retail shops, Mark, some of the better performing areas that people were all excited about with this recovery and the stay-at-home stuff. Walmart was a hot stock there for a bit. We will learn a lot more about that sector throughout this week. That is our Stock Talk section. We are now going to transition into our last segment called our Coach's Corner, where basically we get to give you any of our thoughts of what we're working on and what we're focused on, what we're paying attention to out there. One real quick thing, and probably one thing to promote here today, number one, is our pro membership. And we've got a 15-day trial in the comments below, like we always do. If you love what we do and you're with us all the time, you're probably already a pro. Type in pro member in the chat and show me those of you who are out there in halftime crew. And if you're not, come and join us. We have a lot of content, blogs. We have all kinds of stuff on our website for our pro members that are really, really beneficial. And it's a pretty easy thing to do, 15-day trial. You don't even have to risk anything to go see what we do on the back end. Let's start with you, Cody. Cody, what are you going to be doing this week? What are you focused on? I mean, Monday morning, obviously, we all come in. We have our own routine. I know you've got your watch list. You did the Forex report over the weekend. Your Coach's Corner thoughts here.
My Coach's Corner thoughts is that I'm going to be, cashing in on some of these naked puts that I've had with this big pop. I'm not going to let the gift the market's giving go to waste. No reason to. If I can liquidate some capital out of that, pull some of them off, then I will, and then look for different setups. In the Forex market, I have my eye on the British pound, and because the British pound actually looks like it could be going bearish, and that could be a very nice trade setup against the US dollar.
GBP USD, let me take a peek at that one. It's interesting. It is definitely developing a bearish pattern. Yeah, for sure.
And so the support level, first target's right there at 120, second target's 114. Both of those, if it goes all the way to 114, that would be a really nice trade. Awesome. Mark, what about you? What do you got? What is your focus this week?
Well, once again, the only thing down today are the stay-at-home counter plays. Like you have Shopify down today, you have Team down. Those are kind of under the radar stay-at-home plays. They're not stay-at-home per se, but they definitely got some euphoria by the current environment. You also have companies like Activision and Work, Slack, Zoom Technologies. If we get a 2-3 day sell-off in these names, let's say the euphoria stays and we get in a little short-term downtrend, I'm going to look for reversal signals on these companies. Now, once again, not going to catch. Listen, I'm not doing anything today. I'm going to wait for this to play out. But there's a lot of negative sentiment. I mean, even a company like Clorox, gold, all of these things are selling off. Now, you get 2, 3, 4 days of this. This could get some interesting situations to either buy outright, sell naked puts. You could get some really interesting situations. Not going to stand in the way of the momentum that's happening, because this can carry for several days, especially if the market is really, really genuinely euphoric. So not going to get in the way, but I am going to look for opportunities. So this whole area of the market is high on my radar to see what happens the next couple of days. Might have a nice trade setup develop on it. Might have a nice investing naked put opportunity here. So yeah, that's where I'm going to be focused.
To go with that theme here a little bit, even a couple other companies, Mark, I go through my routine and I always look at the bulls and bears. And I thought it was really interesting that the ones you named, but then like a Peloton, talk about a stay-at-home darling, PTON,
Oh, I have
was
no interest in that company.
was one of the biggest down today, though. Down 8.5%.
Some of these other, like Slack Technologies, for example, if I had a 2-3 day, or Team, I mean, these companies are independently, you can make an investment thesis regardless of what happens with the virus. And if you get a cheap level, I'll take a step. Peloton, I don't think you can say that. Peloton has a long ways to go down, and they are solely a virus play only.
Yeah.
If people start going back to the gym, get used to Peloton back down at $15 sometime soon.
What about Zoom? ZM. Do you think this was a virus theme, or do you think that it's got long-term viability?
I think it absolutely has long-term viability, but it's also valuation is nosebleed high. Noah's commented on that several times. But once again, if I get a huge sell-off, and all of a sudden it zooms at 140, 135 or something like that, and I can start selling naked puts at like $70 and get a big juicy premium. Hey, but once again, you got to think through these things, right? Listen, I'm greedy. And so,
I love the mindset, and it tells you a lot about the way Mark approaches investing, and he's right a lot for a reason. But he would want to wait for Zoom to drop to 135, Noah, to then sell a 70 strike naked put.
Yeah, and I might
I can see Mark being patient enough to wait for that to happen. I can see it.
Either I get my way or it don't happen. I don't have to put. The only person standing in the way of me getting my way in my trading is me.
That's a damn good point.
Yeah, and that's the lesson I taught last week's Forex Report is be okay not being in the market. If the trade doesn't set up the way that you want it to set up, then leave it alone. Just be okay with not being in the market. Be okay with the stock not moving in your direction. Be okay with it moving without you. Just it's okay. There's other trade setups. There are thousands and thousands and thousands of companies. Like, be picky about the ones that you want to play, and if it doesn't happen, move on.
Yeah. No, what about you? Coach's Corner, what's on your mind?
I'll tell you what, Tim, since I was out on the road this last week and got a little bit too much sun and spent time away from the market, it's really, really nice to come back to those scouting reports and to have all the candidates, just curated for me. And so I've just been looking at that list, finding some great candidates, watching the market. And ultimately, I think it comes down to you can trade anything you want to trade as long as you have a good game plan and you're using appropriate, asset allocation, money management, risk management. You can trade whatever you want. You can follow through with whatever investment thesis is that you have, as long as you're rule-based. And again, patience is a virtue.
There's tons of great setups. Coach Gino did a wonderful job on a stock report. The options report with Coach Tyler was fantastic again. There's so many good setups on both bear and bull side. There's no question about it. And by the way, if you are a pro member, you probably already have seen the scouting reports. But for those of you who are not, if you signed up today, the first thing I would recommend is get over to the website and go through the weekend reports. Stock, options, Forex, and the commodity report from Mark, all of them fantastic over this weekend. I'm with you. No, isn't it nice to be able to take a long weekend, come back, and have everything just kind of prepared for you? It's like all these pre-done things, people put the work in, and now you can take advantage of it.
Well, now that's what it is you got the skill set and the knowledge that we build together and all of our other content and coaches shows and everything else we do. But then you get again, a lot of the hard work. And I think that's really where the value is the community, the content, plus there's always something to keep your attention on the market. There's opportunities all over the place, and we're constantly looking for them.
Several charts on my mind as well. Just go through several that may or may not be on those reports, but just hit my watch list today. CRM, we've been talking about for a while. I've been bringing this one up day by day by day by day. And I just want to point out the beauty of a pullback pivot trigger. Little red doji spinner there. It's not really running on it, but I loved that pullback and trigger on Friday. Little carry through here today. Dollar General, DG. They had coverage initiated, I believe, by Bank of America. I'm interested in a high base up here, potential breakout. It doesn't look like it's running with the market there today, which is concerning. MasterCard, MA.
Not a bad little break there, eh?
Beautiful break. Beautiful break. I mean, if you're waiting for this ascending triangle breakout on MasterCard, got above the 200 MA, all that kind of stuff, cleared it out. We've been waiting for that one for a while. And then the energy plays, guys. And I don't know which of these I'm going to take, if any, but these are the ones that grab my attention. MPC, Marathon Pete. Okay. Just the chart looks good, Mark. You know, I know there could be the debate about refiners, this and that, but if I'm looking at a chart, there's so much clear air there on a potential breakout, you know, and it's hard to really not see that. PXD, Pioneer Natural Resources. Just momentum plays as they're coming back off the bottom, and even Halliburton, you know. I usually have some rants about old Halliburton just for a lot of different reasons, but I'm seeing reversal characteristics in the energy sector, some more bulls to pay attention to, and even just the XLE. I mean, look at XLE. Even it is coming back a little bit.
Yeah, it looks pretty good.
Might be the simplest way to play it. Instead of picking a company, pick the whole ETF and play that breakout if you're looking for one. Bear side of it.
Now, go sell a naked put on USO, Tim. That way, when USO stabilizes and is a profitable play for the 9 months, you know you're going to have to hear me crow, right? So you might as well make some money while you do it.
I have rules too. I had a rule that I was not going to play oil in any way until after this futures expiration tomorrow. I'm not going to break it. So
that's a good rule, actually. You should be patient.
Did you write it down on a piece of scratch paper?
I always do. Yeah, I'd have to find it. It might have been a Post-it note, but I was waiting. I mean, and that might be why I feel I'm very curious what's going to happen with oil tomorrow. You know, my expectation is stability, by the way. It feels like the markets have gotten in front of this. Producers have pulled back and suppliers, all that kind of stuff. But I'm still curious. You know, I'm still curious. I'm going to be watching a couple of bears that grab my attention, guys. I know it's a bull day, but if I could give a coaching lesson right now, as always, you need a bull list and a bear list if you're a trader. Mark, if you're truly going to trade like a 22-year-old, at some point you got to go long puts. That's just a point of fact. If you're going to really believe into that,
being a bear
statement a while ago.
Listen, I have a hard time getting behind a true bearish trade unless, once again, day trade, whatever, right? Somebody shorted Peloton today. They're doing really well. Unless one of two things happens. Something actionable happens on the trade war front, or unless you have actionable virus news. Nothing's going to shake these bulls without one of those two things happening. Unless you have real fears of a second wave or something really happened to China, what can knock the bulls off their perch?
Better question, what's going to keep them running on the perch?
Other than those two things, I can't think of anything.
They're going to get bored and want to fly away and do something different. I mean, if the market keeps banging resistance and doesn't break out, we're up big today, but how many days can the market run on, well, we got a vaccine, we're reopening, the virus is down, we don't care about that.
Well, that's the problem with your bearish trades is you wait for confirmation. So it goes down a couple days and then you wait for it to break support. You can't do 3-4 days. By that time, the bulls have come up with a new excuse to run.
There have been plenty of good 3-4 day trades on the bear side. Personally, I'm seeing them. Look at some of these Vulcan Materials, VMC. Let me give you several of my bear charts I'm paying attention to, Noah.
Give me the bear.
I like it.
Look at that little bear flag coming back into old support in a falling trend. Materials have not been strong. Look at Verizon, VZ.
I keep getting my chart switched over. VZ, there we go.
Ugly chart. JP Morgan. I still have the same thesis on banks and financials that they're ugly. JP Morgan hitting falling moving averages. Wells Fargo. See, Mark, I just don't make this assumption that these are big banks.
All of these trades.
I don't ever make the assumption that these are big banks, the government will have their back and things are always going to be fine and they pay a dividend. I just don't buy that argument. I see trends and patterns in bear flags that I know the second any kind of turn happens, these stocks can be down 5, 8, 10%. And if you're truly looking for pop trades, I'm still on both teams.
Listen,
I'm willing to play that bear
side. It is my duty as a member of the team to badmouth any potential bearish talk whatsoever.
I could care less. Caterpillar, look at this one. dependent on international plays and all that kind of stuff, Mark, the higher that goes, at some point you got to be
the
like,
higher that goes, once again, yeah, like when it rose up to 128, that's when I was like, this is stupid.
right?
Like, yeah, like, but here's the thing: if you're gonna make a fundamental play, like wait for it to become like really expensive, and then you're like, oh god, I have to short it at this point.
I think CAT is really expensive right now when the market's at the highest forward P ratio we've ever been. Deer.
You know what I have to say to that?
And one last,
Money
I'll let
printer
you go
goes,
off. I promise I'll let you have the last word.
Money printer goes brrr.
And then WDC, one last one there, Noah. I'm still seeing interesting bear setups if they trigger, confirm, and happen. There, to me, this is a stock picker's market. Now, Mark, you're not a bear. You don't trade bearish. Even when you have bearish, even when you have bearish thesis on the market and you think it's stupid and going to crash, you still don't go out and play long puts. It's not your style, right?
Well, no, but there will be times where I think it's appropriate, like really appropriate. But I have to see something actionable. These bulls are too relentless. The team who's winning, they have so many, they got so many unfair advantages to them. You know, all of your good arguments, they just say that none of that matters. And I got the Fed and I got a vaccine and we're open. And it's all this. Like, it's just really hard to be a bear. I would wait for something actionable to happen. Something like, oh my gosh, you know, until that happens, it's really hard for me to get on board with bearish trades. I would like to, right? I think the valuation of Apple right now is stupid. I think CAT is in a world of trouble. I think the bears have all of the good, logical, smart arguments. But man, I got a bunch of 22-year-olds on my side, and I got Jerome Powell, and I got Trump, and I got all of that. And I got a bunch of medical scientists working nonstop to break news like today. That's a powerful team. That's a powerful team in this environment.
There's no question. There's no question. And the short-term themes, it's hard to see a path to when they get derailed. Even second quarter data is going to be ugly and they're going to be able to shrug it off and all that kind of stuff.
Doesn't matter.
But in the history of market selling, when did you know the exact time it was going to actually matter? Because themes have been developing for a long time on different fronts and all kinds of stuff. The idea of the Fed raising interest rates back in 2018.
I mean, that's why I'm cautious, right? I mean, that's why I'm very cautious with my investing, because I buy the bear arguments. I really do. I just think the bulls have so many more catalysts that can help prop up. So, I mean, I'm not going to get spooked, you know, until I see something like a second wave would terrify the market. I mean, a second wave that was bad, not just more cases, not just more deaths, not just, I mean, something really, really bad. But that's a long ways off if it happens, most likely, if it happens at all, right? You know, something with China, I think it's coming, right? I don't know when. It might not, though, right? I don't know. It's just hard not to be a bull these days.
It is hard. Bulls are winning for quite some time. One last thought here on the VIX. I just want to pitch something real quick here, Noah. And even if you're not a bear, there is a role for put options in your portfolio. Just in the chat right now, if you're watching my show, type in put options. And one thing, let's say that you don't want to speculate on that bear side. I still see great setups. I'm willing to pull the trigger on them when they happen. There's not even a debate or a doubt in my mind I will do that. But I'll tell you this, even if you don't play that side of it, there's a role for put options that is much, much more important for your long-term portfolios in your investing. Warren Buffett style, George Soros style, any big investor who's ever played it, they use put options as insurance. And so just type in the word insurance in the chat. And today we're going to be on our podcast, we're going to be talking about protecting portfolios. Because, you know, everybody wanted insurance before the crash. By the time the crash happens, Noah, the VIX spikes to 85. They're the most expensive in quite some time. Now, I'm not saying VIX 28 is cheap, but if you were waiting for a time where you could buy some hedges, where you want to believe in the team argument, Mark, and stay invested long term, but maybe you want to take a little risk off to hedge off a little bit of that delta against your long-term holdings, mutual funds, whatever it might be. There's a delta hedge play called an SPY put. We'll be discussing it in the podcast. Guys, we got to wrap on time today. Cody's got a meeting. Mark, pitch our 15-day trial. Last one.
Team tackle has, listen, we have so many things that we teach you how to do. We teach you to fish. at Tackle Trading. And we give you some fish as well on occasion. And our members give us some fish. Once again, a member gave me a great trade on UNG that I would have missed. The power of community cannot be understated in what can be a very lonely world of trading and investing. You sit there, you're oftentimes isolated. Having a true community in which you can bounce ideas off and learn the tricks of the trade, invaluable. Come see if this community is for you. Go to tackletrading.com, go to the store tab, sign up for a pro membership or a 15-day trial, or you can always email me at team@tackletrading, and I'll be happy to do all of the paperwork for you.
You are muted, Tim.
I did mute there last minute there, Cody. Great job, everybody, today. I enjoyed the content. I enjoyed the conversation. Always a lot of fun. Hashtag Team Tackle out there. We will see everybody tomorrow. Same time. We're out.